Hey, good afternoon, everyone. This week we're going to cover for the week of 3/19, investing for next week. We're going to take a look at what happened last week and what we're going to be doing after that. So the first big thing is that the Fed balance sheet went up to 8.69 trillion, the highest since November, due to helping the banks. So now they're printing more money, and we'll see what happens. Life gave us some lemons, so Greg and I are looking at perhaps buying some bank stocks very cheap, or perhaps selling volatility as it's going up. Taking a look at the weekly market report, SPY is up about 1.20%, 2.41% year to date, although QQQ rising over 4% for the week. The dollar is pretty stable right now. I'll call out that oil and oil futures are down about 10% for the week, 13% for the year. Gold is up. TLT bonds are up. VIX is down, surprisingly, although we are closing at a 25.51. We haven't closed above 25 in a while. Bitcoin, at the time I put this together, was below 28. Now it's actually above 28. The takeaway from here is on these charts is that the S&P 500 is not performing as well as the Qs, the technology, the Apples, the Microsofts, the FANG stocks, if you will. Taking a look at the weekly FinViz heat map, this is not one day, this is the entire last week. It's almost as if a diagonal line could be drawn through this, and the green is in the upper left and the red, except for utilities, is in the lower right. What this is telling us, though, basically is that communication services, technology, and utilities are leading sectors, and energy, financial, and basic materials are lagging sectors for the past week. Now take a look at Bitcoin, which is up 30% over last week. It didn't go to the moon, but it is doing fairly well in terms of the fear of the finance markets. Coin is acting like gold, kind of a flight to quality, if you will. I don't know. We'll see. Also incredible is the change in the yield curves. The black line here was the 2-year, up over 5%, and now it's 3.8%. 30-year is 3.6%, and the 10-year is 3.4%. So all three of them are below 4%, which is interesting. And if you look at the difference between the black line and the blue line, the gap is shortening, and it's getting less and less space between them. And that's what this chart down here is. The blue line is the yield curve and the difference between the 10-year and the 2-year. And so anybody that was doing that knob spread trade, 10-year versus 2-year, has done very well if they expected the yield curve to narrow. I've done it a few times throughout the last year, but really haven't had a lot of luck until very recently. 44 basis points, so we still have a ways to go to we're not inverted any longer. Crude, I talked about, is down quite a bit. This is looking at /CL. This is the oil futures market, down to about 66.93. There's a lot of news going on with Saudi Arabia and Russia and Biden. And of course, the banking sector is making everyone nervous. And as a result of that, oil seems to be in decline. At the same time, all of this fear is making gold break out. We did a gold head last week, took it off on Monday. I got about 40% return on investment for that. I don't know. I might look into entering another one, but I'm not sure if we need a little pullback first before it continues running. Hard to tell, but there was a nice gap up on Friday, which of course I didn't capture in that 170, 174 bullish vertical call debit spread. You can't see it on this chart here for the VIX, but it did reach up to 30. If I showed candles, it did reach up to 30, came back down. But that's interesting that it didn't come down further to where it usually likes to live in the 20s since the beginning of the year, give or take a few days. But it closed over 25. Volatility seems to be holding for now, so it'll be interesting to see what happens next. There's many inputs that go into the fear and greed index, the VIX being one of them. Another one I called out here is the put call ratio, and that is 104. And what that means is that slightly more people are buying puts than are buying calls. And you can think of that as portfolio insurance. Moving on to our hot trades. So we did an iron condor in the Russell 2000. The Russell 2000, also IWM ETF, same thing. There are quite a few regional banks in there. So the volatility has gone way up. And if you look here, we're at about 6.3 IV rank. So that means you're getting a lot of premium for doing this kind of trade. Right here, you can see that we're right in the middle of the Iron Condor, and we have short puts down to 160 and short calls up to 184. And we're looking to close this on or before mid-April. So somewhere where my mouse is here, I don't know if it would be unreasonable to hang out here for a little bit or whipsaw back and forth. Hopefully, if it stays between these two blue lines, we profit. I'm looking to take it off at 21 days till expiration. That's the end of March. So hopefully we'll be profiting. There is a 75% chance of getting a profit here on this Iron Condor in IWM. So we'll see what happens. Did a few other trades this week, which you can read about in our newsletter. The link to subscribe is in this video, so check that out in the description. Got some earnings next week. We're already in a pretty high volatility regime, and I like earnings because when volatility isn't high, you get an opportunity to have the volatility go up and then way down, and you profit as it goes down. So there's not a lot of excellent earnings opportunities next week, but I will point out Nike, GameStop, Petco, Chewy, General Mills, and Foot Locker, but it's probably too late to do any options trades in Foot Locker because it opens on Monday before the open.
Please like and subscribe to our weekly market updates in this channel. And be sure to click the bell so you're notified immediately each time we publish a new video. Happy trading!